There is a free tool that I've been using every single day here in the crypto market for the last 5 years straight in order to help me generate hundreds of thousands of dollars in realized and unrealized profits. And in today's video, I'm just going to give you everything. I'm going to tell you exactly what this tool is, how it works, and how I personally have used it every day to help me determine if I'm going to buy or sell any of my cryptos. And so without further ado, we're going to just dive straight on in because it may be a little bit complicated at first, but trust me, if you give me this whole video, I think you'll have a great understanding of how it works towards the end. Now, today we're going to be talking about the Fibonacci retracement tool, and more specifically, the golden zone within the Fibonacci retracement tool. Now, again, I know that might sound complicated, but just give me a few minutes and let me explain. Now, this tool that we're going to be using today has one very key usage. There's something that you can do with this tool that will give you a really strong advantage here in the crypto market. And what that is it will allow you to determine whether a crypto is very likely to bounce when it is going down or reverse when it is going up. So if you're looking for moments of reversals, like, hey, when should I start looking to sell my crypto because it's going to start falling soon? Or when should I start buying some crypto because it's going to bounce soon? That's what this tool allows you to do. Now, it doesn't work like the RSI. It doesn't work like the MACD where it tells you where something is overextended. But matter of fact, it plots out key levels of psychological liquidity, at which point you can expect that crypto asset to reverse at. So let me just show you how it works because I think you'll start to understand me a little bit better. So let's say there's a world in which Bitcoin's price goes all the way up just like this, and then it starts to fall. And as its price is falling, you're trying to determine, hey, at what point is Bitcoin going to find some support and start to rally towards the top side? At what point should I start looking to buy a little bit of Bitcoin? This is what the Fibonacci retracement tool is for. Because what you can do is you can use this tool and you can plot out a couple different levels that then tell you where you are the most likely to see a reversal. And these levels are called the Fibonacci retracement levels. Now, in order to get to the Fibonacci retracement tool to see these levels, all you're going to do is head to tradingview.com. You're going to pick a chart and you're going to head over to the third row down right here. Click on this right arrow, and then you're going to see this. It's going to be some lines, circle, circle, fib retracement. And I favorited it, so that's why it's at the top. You're going to give that a click. And once you give that a click, you now have access to the Fibonacci retracement tool. Now, let me show you how to use this in this exact scenario, and then I'll go a little bit more in depth about the tool itself. So in this exact scenario, if I'm trying to determine, okay, Bitcoin's price just went up, now it's coming back down, where can I find some support? What I'm going to do is I'm going to use the Fibonacci retracement tool. I'm going to start at the bottom and go to the top. Now, you may say, Tyler, why do you need to go from the bottom to the top? Because it's called the Fibonacci retracement tool, and it can only be used when a crypto is retracing, which in other words means it just went in one direction, now it's returning in the opposite direction. So say, for example, if Bitcoin's price went up and is now coming down, that's called retracing because it's retracing its previous footsteps. Or let's say, for example, Bitcoin's price just went down and is now going up. It's retracing its previous footsteps. It's retracing this move. So then you can use the retracement tool. So what we're going to do is, since it is going down, we're going to start at the bottom and we're going to go to the top. And what this now gives us is a bunch of these different levels. Okay, you see how right here it says 0.236, 0.382, 0.5, 0.6187, 0.786, right? You see how we have all of these levels? These are called Fibonacci retracement levels. And each one of these levels provides a very high probability chance of Bitcoin's price bouncing off of it and continuing back in the opposite direction, or at least seeing some sort of recovery to the top side every time it hits one. Now, some people like to use every single level. They like to use the 236 and the 382 and the 0.5 and the 0.618. But personally, what I've come to realize is there's only one level that is extremely reliable. There's only one level that is extremely good. And it is the level that rests between the 0.786 and the 0.618 right here in this golden zone. And so what I like to do is I like to isolate that zone. I get rid of every other level except for that zone. And the way that you do that is you just click on one of the lines. You'll see this pop up, click on the settings, and then you're just going to get rid of everything. 0.236, 0.382, 0.5, 2618, 1272. You just get rid of all of it. 1.618, just get rid of all of it. And then you're going to make the 0 gray, the 618 gray, the 1 gray, and the 786 yellow, and press OK. And it's going to make it look like this. And this isolates. Now, instead of being the Fibonacci retracement levels, it's now the golden zone. And the golden zone is actually the tool that I use. Many people use the Fibonacci retracement levels, which are all those levels you just saw. I use the golden zone. Because what I've come to realize is that this is the most reliable zone in order to tell you what is very likely going to happen next. For example, Bitcoin's price started down here, worked itself up, and starts going down. Yes, it might bounce sooner, and it might see some sort of reversal way up here, but it's not super likely. What is oftentimes very likely to happen is that Bitcoin's price is going to come all the way back down to this golden zone and retrace back into this golden level. And from here, it'll make a massive decision. The bias is that it will very likely bounce off of this level and head back in the opposite direction. Okay. So if you're going back down, you are very likely to bounce off this level and head back upwards. And so one strategy that people often deploy is by, buying whenever we hit in the golden zone. So say, for example, we went up, we came back down, people save their purchases for the golden zone because it has a high likelihood of breaking to the top side. Now, another thing that people do is they try to time their short trades off of this level, because what they'll say is, okay, well, listen, if we don't hold in here, knowing that we're supposed to hold in here, what is very likely to happen is that if we start to pull back, that this crash is going to get gnarly, and we're very likely going to come back to the very bottom of this move. And from there, if we don't hold there, we're very likely to head way lower. So they use this almost as like a decision-making zone. If we bounce, we're usually in a good spot to continue upwards. But if we fall through this, man, oh man, can things get ugly after falling through the Fibonacci golden zone. So some people say, okay, I'm going to buy, and if that purchase doesn't rally, I'm going to close down that purchase and open up a short trade because we're very likely to move to the downside, right? And so that's how oftentimes people will use this to the downside. But let's talk about how you can also use this to the upside. Because let's say, for example, Bitcoin's price, instead of going up and now retracing down, it started off by going down like this. Look, let me just get rid of this really quickly. Instead of going up and now coming down, it was going down and is now going back up. So remember, let's say, for example, we are in a downtrend and you want to know, hey, while we're starting to retrace back upwards, at what point are we the most likely to get rejected and head back into this downtrend? Maybe you're shorting the market, or maybe you just want to know when this downtrend is going to end. That's when you can use the golden zone. Because say, for example, we make a move like this and we start retracing back upwards, what you can do is use that Fibonacci retracement tool, start at the top because we're going up, start at the top, and draw it going down. And oftentimes, you're not going to have to do this every time, don't you worry, but you're just going to want to get rid of all these other levels for now and look at it for what it is. Now you can see the golden zone is laid out just right here. And that is the level that you're the most likely to get rejected. And so what we can see is that, yeah, Bitcoin's price may be rallying and looking really good, really good, really good. And oftentimes, once it hits this golden zone, that's where things get ugly. And next thing you know, we start getting rejected towards the downside and oftentimes pushed back below the downside. But remember, just like to the downside, it applies to the upside, is that if Bitcoin's price is going and it breaks through this golden zone, oh man, things can get real good from there. And oftentimes you can see huge breakouts to the top side into what are called Fibonacci extension levels, which I'll explain in a future video. But for now, let's just focus on the golden zone because, again, it's another decision-making zone. Let's say, for example, you just perfectly timed Bitcoin's bottom right here. You just got it, somehow nailed it. And Bitcoin's price rallies all the way to the top side. It's probably a decent time to take some profit off of the table on this purchase you made right here because Bitcoin does have a high likelihood of getting rejected here. But if Bitcoin's price does break through it, hey, guess what? You could be in a great spot where these gains could continue and they could continue on for a while. And so you can monitor very closely what happens here at the golden zone in order to anticipate what you should do. Another thing that people like to do is they like to use this golden zone, especially in this scenario, for short trades. So what they'll do is they'll see the market recovering and they'll wait for Bitcoin's price to hit this golden zone. Once it hits the golden zone, they'll open up a short trade, which is when they're betting that the market's going to go down, and they put a stop loss like right up here, for example, so that if we push through this golden zone, then things are probably going to get ugly and they want to close down that short trade because it's probably going to pump and their short trade will lose money, right? And so what they'll do is they'll open up a short trade in this golden zone, betting that we get rejected, and they'll try to scalp it to the downside. So they'll open up a short trade here, maybe take some profits somewhere around here. Okay. And so I hope you can start to understand that this golden zone can be extremely effective when we're retracing. Let's say, for example, again, Bitcoin's price went up and now it's going down. You can figure out where that main level of support should be. And when we're going down and we start retracing up, you can find that main level of resistance. If you hit that level, likely to get rejected. But if you don't, a breakout could happen. If you hit that level, a rejection could easily happen, pushing you back upwards. But if it doesn't, man, a huge breakout could happen. It's a massive decision-making zone, and it can really help you decide what what Bitcoin's price is going to do next. And so now that you have a general understanding of how it works, let me show you it in real time so you can really see the impact that this Fibonacci golden zone can have. So let's just go to a random example. I want to go to like a full move where we've seen a clear picture of what's happened. Okay, let's start with this one. This is a really good one right here. And so what we can see is that Bitcoin's price in this instance was up, then it started going down, and then it started going back up. So what we're going to do is we're going to say, okay, since we're going back up, at what level is Bitcoin's price either likely to get rejected or going to open up for a really big breakout? So what we're going to do is, since we're going up, we're going to start up, and we're going to draw on our Fibonacci retracement tool from the top down to the bottom, that low down there. Get rid of this right here. Boom, 0.5. There we go. And then look, let's get rid of that extension level as well. So this is what we can see. And look how cool this is, guys. So what happened with Bitcoin's price was that it came down and started to recover. And it did a really good job. I mean, it went vertical up until when? Up until the point that it hit the golden zone. And at the golden zone, that's when things started to get a little more risky, right? We can see that Bitcoin started to struggle here. But Bitcoin's price gained strength. It gained momentum and broke through that golden zone, back tested it, back tested it, back tested. You see how it came back down and built up a massive zone of support? That's because this was previously resistance. And now that it's above that resistance, it's flipping this level into support and attempting to use this support in order to break back towards the upside, which is exactly what it did. And what you can see is that Bitcoin's price came back down, flipped this into support, and then used that support to rally all the way to the top side. So this was an example of Bitcoin breaking through the golden zone and using that breakout to run to the top side. But it doesn't always go like that. And sometimes Bitcoin gets rejected off the golden zone and things get really ugly. For example, like what we saw back here. Do you see how Bitcoin's price started up here, came all the way back down here, and then rallied back to the top side? Well, we can look at this and think, okay, well, Bitcoin's retracing. Where is it the most likely to get rejected back to the downside? So what we're going to do is, since it's going up, we're going to start at the top and we're going to draw on our retracement tool right here. And look at this. Do you see how Bitcoin's price rallied all the way up to the golden zone? Then it started to struggle, started to flounder. It couldn't get above that golden zone. It just couldn't fully break above it. And without being able to break above it, it got rejected to the downside. And then it tried to come back up again, then got rejected to the downside. Then it tried to come back in and then got rejected to the downside. Before eventually Bitcoin's price was capable of making that move, breaking above the golden zone, flipping it into some support, flipping it into support, then using this zone of support to absolutely send to the upside. This is a beautiful example of the strength of the golden zone, because in this moment when we got rejected here, we got rejected here, we got rejected here, it kept forcing Bitcoin's price downwards. But once Bitcoin finally broke above it, boom, that door to the upside is open and some massive gains were available. And so those are some great examples of Bitcoin's price getting rejected off the top side and breaking through the top side. Let's now look at some cool examples of Bitcoin going to the downside and interacting with the Fibonacci golden zone to the downside. So let's just look for a random example. I mean, we can really use any time that Bitcoin's price goes down because it almost always interacts with this level. But look, you know what? Matter of fact, let's use this exact example. You see how Bitcoin's price went down, went up, and then started coming back down? Well, you could have actually applied the golden zone in this same exact example. You can say, okay, well, Bitcoin's price was down. Now it's recovering. Now it's coming back down. At what point can we expect to find some support here, then use that support to continue upwards? Well, of course, since we're retracing downwards, we can use the Fibonacci golden zone. And remember, since we started down, we're going to start down here since we're going down. Boom. So we're going to draw on our Fibonacci retracement tool to the downside. And so from this low to this high, Bitcoin's price starts coming back down. Guess what? Until when? Until it hit the golden zone. And Bitcoin's price found some support exactly at the golden zone and used that golden zone in order to push back towards the top side. So do you see this moment in which Bitcoin's price actually holds the support on the golden zone? It opened it up for some absolutely fantastic gains towards the top side and an absolutely beautiful rally. Really good stuff there. But let's talk about moments where the golden zone doesn't hold. Let's talk about what happens whenever we try to build some support there, but we fail, just like we did right here. Do you see how Bitcoin's price was down, went up, then started going back down? Well, we can naturally say, okay, well, since Bitcoin is coming back down, where can we expect it to try to find some support? And so since we're going down, we're going to start down and go from the low to the high. And look what happened. Bitcoin's price did a really good job. It came all the way back down to the golden zone. It tried to hold some support, but eventually it failed that support. And what happened afterwards? It nuked absolutely fell. And that's what I told you. When you lose the golden zone, either break through the downside of it or break through the top side of it on the top side golden zone, things get crazy. Like the breakouts get crazy. And that's what happened right here. It got crazy. And this golden zone lost support. Boom. And we just sent it all the way to the downside. Bitcoin fell from $22,000 to $19,000 in like 3 days. It was a huge move to the downside. That was over like 12% at the time, which was a big move for a $1 trillion asset. And Bitcoin's price eventually came back down, found some support, and then used that next level support to push back up towards the top side. And so you can see here, it doesn't mean that the Bitcoin price, for example, or altcoin prices will always hold some support here. It's a decision-making zone. If they do hold support, you're usually in a really good spot. If they don't hold support, though, things get very, very ugly. And so it's extremely important to be watching and paying attention to where these golden zones are. So say, for example, we fast forward to the modern day. Let's go to where we are right now. Boom. And I'm looking at Bitcoin's price and I'm trying to determine what's going on. This is what I would personally say. I would go back to one of our most recent lows. Let's go ahead and use this more regional low back here. Boom. And since this low right here, since we haven't taken this low out at any given point recently, Bitcoin's price has now rallied to the top side. So we have a clear move, a low to a high. What I would do is I would say, okay, well, since Bitcoin put in this low and it put in this high and it's coming back down, where is the Fibonacci golden zone? Because that's the level that Bitcoin's the most likely to hold some support at. So since we're going down, we're retracing down, we're going to start down. We're going to go down here. We're going to draw in our Fibonacci golden zone all the way to the top side. And you can now very clearly see what's happening. We put in a low, we put in a high. Bitcoin's price came all the way back down, attempted to lose the golden zone here, but failed. We closed back up here. Now, Bitcoin is currently battling at this golden zone, so a massive decision is being made. If Bitcoin's price loses support here, which looks like it's falling below $103.7 thousand and closing below that level, that's really bad, guys. And we easily could start to see Bitcoin's price really fall heavily. But let's say, for example, if Bitcoin's price continues to maintain some support and does push back up towards the top side, then we're in a really good spot in which Bitcoin could open up towards the top side and start giving us a really nice pump upwards. Now, if you want to know a pro tip, you can actually use multiple golden zones at once, which is what I would do. And this is exactly how I would play the game. I would say, okay, Bitcoin's price is currently ranging between this move to the downside and this move to the top side, creating this golden zone to the bottom side. Well, guess what? Now that Bitcoin is trying to build some support and might be trying to work itself back upwards, we can also use the top side golden zone. So Bitcoin made this move up and then this move down. So what I can do is I can draw in my Fibonacci golden zone from the top side to the bottom side, and now I have a range. And I can say, okay, whichever one of these Bitcoin breaks first is the direction it's very likely going in. If Bitcoin's price bounces off the golden zone to the bottom side and breaks through the golden zone to the top side, we can easily open up for a beautiful move. And if Bitcoin's price fails to do that and breaks through the bottom side golden zone, that's bad and things could get ugly. And you can see that playing out here. Look at how Bitcoin found support here, rallied all the way up to golden zone resistance here before getting rejected back down to some support. So you're clearly seeing us ranging and bouncing between top side and bottom side and top side and bottom side. And if you learn how to use both of these golden zones at once, you can be in a really, really great spot where you can make some really, really easy scalp trades. If you want, you can either buy the bottom side, sell the top side, or you can just know what to do. Just wait. Wait for Bitcoin to either break through this zone or break through this zone and then make a move next from that decision. Okay. And so hopefully this hasn't been too confusing. And I know it's not the most beginner-friendly topic ever, but hopefully you have a clear idea of how these golden zones work and how you can use them in order to determine where you're going to see some resistance, where you're going to find some support, and watch what for the decision that's made there, of whether you break through it or whether you get rejected at it, because the move that is made off that zone is oftentimes very big. Now, this is not the only usage of the Fibonacci retracement tools. There's also things called Fibonacci extension tools and a couple more sequences that you can use with the Fibonacci. So I will eventually make another video going over some other use cases of the Fibonacci extension tool in the golden zone. But this is what I personally use every single day, and I wanted to start you off here. And listen, if this does feel complicated, like if this feels hard, which listen, I don't blame you at all, it very well might be quite complicated, I do encourage you to head to the link down below and go check out the Crypto School. This is a school that we founded years ago. And in this school, we teach people all sorts of things, the Fibonacci's included. We teach people technical analysis. We teach them fundamental analysis, leverage trading, and so much more through workshops and coaching sessions. There's courses. There's so much there. It is extremely packed with value. I created it years ago. And so since then, there's just so much that is there available for you right now to learn. And you can join a thriving community of people who who are absolutely killing it. Matter of fact, if we actually just quickly head over to the community gains section over in the Discord, you can see the sheer amount of gains that are being generated by this community every single day. It is insane. They are generating hundreds of percentages and gains every single day. And so if you want to join that, I will link it down below. The link's over to the crypto school, and I explain it way more in depth over there. But hopefully, of course, you did enjoy today's lesson on the Fibonacci extension tool or the Fibonacci retracement tool and the golden zone. And I can't wait to see you all in the next educational video here on the channel. Peace out, everybody.